Welcome to my channel. This week has pretty much been dull. We have seen just returns of 0.5% over the week, and in the 4 trading days, we have seen 2 negative days and 2 positive days. Overall, this is not so great in terms of returns, but the market is stabilizing after good returns of 2 to 3 weeks. Moving on to the other sectors of the market, with respect to Nifty 50, so Nifty 50, we have seen that the market has been kind of volatile or being stabilized at the 50 days moving average range, which I'm highlighting here. And if this continues to sustain, we definitely can see a slight pullback and again one more leg of uptrend, which is going to resume or confirm, saying that we have completed the entire bear cycle. At this point, I pretty much feel that the bottom, which was made on the week of 30th March, will be the long term bottom. If it holds and if we get a pullback and one more leg of run, it confirms, saying that we are completed or done with the bear market altogether. And if we see the charts of Nifty 500, we see a similar pattern, but the charts of Nifty 500 is pretty much stronger when compared to Nifty 50, because the chart says that the rejection is a 200 days moving average of Nifty 500. So what does it say? It ultimately confirms, saying that the large caps or the Nifty 50 stocks are not performing well when compared to Nifty 500 stocks. The stocks which are not there in the Nifty 50, that is the other 450 stocks from Nifty 500, are performing well. This gives us a clear indications that market is slightly or moving totally from the large caps to mid caps and small caps, where the risk to return is in favor of the investors. So that is what we can conclude from this. Now moving on to the other sectors which are lagging, I can see Nifty IT, which is still dull, and in the past week there was a good amount of selling, and currently in this week we can see slight amount of pullback, but I don't expect this to hold for long, and this is going to be a very crucial time because we are in the range of the previous support, which was made in the years of 2023. Now, if that particular support holds, then we can anticipate next leg of bull run with Nifty 50. Else, I'm not very much hopeful on Nifty IT as suggested earlier. We definitely can see the winters in Nifty IT sector. Moving on to auto sector, again this setup is not that great. We did see a certain good amount of pullback in the month of from April 2025 till January 2026, but from there on there has been good amount of drawdown, which has not recovered completely. Though the structure is not that great, I'm not that hopeful with Nifty auto sector. I'll just wait for things to resume over time. And the same pattern repeats in Nifty India Digital, on the reality, and again overall Nifty broader market or finance or PSU banks. See, earlier in the PSU banks we did see a good amount of breakout, but the current price action is clearly indicating that there is a strong rejection at Nifty 50 days moving average here, which is a very good sign, saying that the bull run might not resume so easily with Nifty PSU bank. Though the net interest margin, that is NIMs, with respect to the banks are doing great, the broader finance sector is under immense pressure. As a result, Nifty PSU bank is trying to not make the next leg of highs, which is clearly indicating that the investment in this particular sector should be made with good amount of caution. Now, similar pattern has been observed in Nifty Private Bank. Again, there has been rejection clearly over here, and we don't see another leg of run until there is the next leg of or the next highs are being breached. Now, this pattern has been confirmed in Nifty 100 as well. One thing what we have to observe is like Nifty 100 is nothing but combination of Nifty 50 plus Nifty next 50. So if Nifty 50 is underperforming, but Nifty 100 is trying to pull back above 50 days moving average, then by default it indicates that Nifty next 50, the other 50 stocks, are performing well within Nifty 100. Again, I'm not so hopeful on Nifty FMCG sector as well as Bank Nifty, the CNX Media, that is Nifty Media. Overall, what does it say? Overall, it is saying that the stocks or the sectors which performed well after COVID, that is post-COVID, are not doing great post this leg of correction. What does it exactly indicate here? Is like the sectors which were kind of neglected or did not have very great run are being brought into the prominence. So far, let's see from the point of loading sectors which have the potential to go up, which is Nifty India manufacturing space, Nifty healthcare, Pharma, mid caps, housing sector, that is Nifty housing, not the core housing, the infra sector, small cap space, micro cap space. You clearly can see the pattern here. In all these sectors, we definitely can see that the overall price action is so strong that market is trying to move up beyond 200 days moving average. Let me revisit the space here. With respect to manufacturing, you can see the price action is above 200 days moving average and 50 days moving average. Same with healthcare. There has been a good amount of recovery in this week. Same with pharma. Again, mid cap. You can see the price action is so beautiful and great, especially in the from past 2-3 weeks. Market has continuously pushed up ideally here. And coming to the micro cap space, we can see that there was good amount of correction and we had neglected in the past, like saying in the month of March and April. But again, from past 3-4 weeks, there has been good amount of buying. So it clearly indicates saying that the money is moving clearly from large cap space to the small cap and the mid cap space as well as the micro cap. So we are set to see good amount of uptrend in these particular spaces. Now coming on to the leading sectors, we see that Nifty Metal is still outperforming the overall broader market, which is great. Nifty Defense, again, it is going to outperform in the coming days, where there are very high chances because the government spending is so great over here. We are expecting one more leg of run. And as indicated earlier, Nifty Energy has made a good comeback altogether in terms of the returns. And we did invest in the month of March and April in this particular space. As a result, we are seeing good amount of returns in our portfolio as well. Now, I'm still hopeful on Nifty Energy, power sector and other parts, which is doing perfectly fine. And next leg of run is going to come in this particular space. So overall, from this broader market perspective, what we can say here is money is moving from large cap to mid cap and small cap and micro cap stocks. Apart from that, commodity cycle is on. We are seeing good amount of up run in broader market with respect to commodities and infrastructure and manufacturing space. Now, there has been one particular concern with respect to the oil. In the past week, Indian market was volatile broadly due to the fluctuations in the oil prices. What we can observe over here is like in the past, when the war broke out, oil did reach a height of $119 or $120, and India is paying 12% premium on top of this particular price, which ultimately translates to around $130 to $135 per barrel. Now we are on the point of $102 again, which is not a great sign for Indian markets. But observe the price action here. Oil price moved up, pulled back, and it's trying to move up again, and sellers are getting activated at the region of $110 or $112, which is a very great sign in terms of where Indian markets are going to bottom out. And if there is a pullback in the coming days, like in the range of $80 or so, we are definitely going to see one more leg of run, which we are anticipating from long in Nifty or Indian markets is going to resume for sure. So this is my anticipation for the coming week and the coming days. Hope you have liked the analysis. Stay tuned for the upcoming updates. Thank you.